Good morning, traders. It is Tuesday, August the 5th. Taking a look at the charts, we got the SP 500 futures. This is the 10-minute chart. You can see here over the past couple weeks, we saw a massive market sell-off. Uh, Unfortunately, we didn't get to catch the downside move for this first leg here, but it's better to avoid a market sell-off than it is to try and get caught up in it and actually see your account go down with the market. Now, overall, the market here has been trying to consolidate, form a little bit of a base. Yesterday had a little bit of a pop and break to new highs, short-term new highs, and this morning we're seeing the market trade down about 0.4%. So it's going to be a pretty sharp gap to the downside. Now overall, it's holding some key pivot lows. We've got this first little pivot low, second pivot low, and it looks as though it could come somewhere down into in this 1920 area or even somewhere just where it is, but it could easily continue to kind of grind its way higher. Now, what we're looking for is a potential short play. Now, if I just show you the overall trend of the market, this is the SP 500. This is a 30-minute chart showing you the trend. Overall, you get these oversold dips, which are somewhat of short-term buying opportunities. And then we start to have the trend go neutral, and no trades are taken once the trend starts to go neutral, meaning cycles are mixed, the momentum is mixed. And now the market is actually somewhat in a intermediate downtrend. So what we'd be looking for going forward here is simply the market to work its way higher and sideways. So we're going to see a gap down this morning. We could see it kind of just chop around and kind of work its way to the upside over here. Eventually we'll probably have the 20-day moving average kind of move its way down, and there'll be some type of shorting opportunity. Now you can see up here we had extreme high levels of panic selling. We had a ratio of about 8 to 1, meaning there's 8 sellers to every 1 buyer, and that was the panic selling down here. In the last couple of days here now we're starting to see buyers move in. It's minimal. We really want to see this above the 3 level. Ideally we want to see it up around the 4, 5, 6 or even higher level. So overall, as the market moves up, we'll probably see more traders start to accumulate and start to get long again, and everything will get to a level here where we end up triggering some type of short-term short signal, and we'll actually be shorting the market looking for a move down. Now, as far as shorting the market, we'll actually be using an inverse ETF that will rise in value as the market falls. So right now, as opposed to looking to buy dips in sectors and stocks, we are actually looking to short bounces in the market because from a technical standpoint, the trend is technically down for now. Now, keep in mind, this is not a bear market. This is simply a intermediate trend within a bull market. So we could see lower prices here for another 2, 6, 12 weeks of market chopping around. It could become very volatile sideways market, but overall, as long as the momentum and cycles are trending down, it means pops are generally going to get quickly stepped on and sold right back down, and that's where the easier money will be made. Now, taking a quick look back at the charts here, let's look at the Russell 2000. I'm just going to go back to the daily charts. We can get the bigger picture here. Here is the Russell 2000. We are getting very similar to a setup that we saw back here. The Russell typically leads the market. Looking at this price action, you can see we've got a very similar head and shoulders pattern forming again. Russell 2000 being the most leveraged plays, the fastest high beta stocks. Usually you see the smart money move out of these first because these are the stocks that are going to get hit the most. These stocks in general on an individual basis can drop easy 30, 40 plus percent. While the market just does another leg down, very similar to over here. You see the market pull back. This could do the same thing, and these stocks on an individual basis can drop substantially on a percentage basis a lot bigger. So overall, we're seeing Russell 2000 show some distribution and a topping pattern. If we go to the large caps, go right to the Dow, the top 30 stocks, we are not seeing a topping pattern yet. We are just simply seeing a correction, a pullback in the market, and we need a lot more damage to be done on the chart on the large caps before we actually see a real market reversal to the downside. We need to really see another big crack. Let me just zoom in a little bit here. We need to see a larger crack to the downside, meaning we see price extend and really break down the second half of this leg or even beyond that. And then we need to see it really kind of die out and not recover in a sharp way, but actually kind of fizzle out, and then we eventually see it start to break down after that. I did an interview yesterday with Kerry Lutz, which I'll be posting here later this morning, so you can kind of hear about my long-term kind of big picture where we stand with the overall market. But overall, I think we are slowly getting into a topping phase. The Russell 2000 shows that the most, and at this point, it'll only be an intermediate correction that could last a month or two. But if it does get ugly, it will be the crack that actually brings the market and starts the bear market down the road. But again, that's going to take months to play out before a bear market could even be confirmed. Taking a look at the chart of bonds. Bonds have been chopping around here. I pointed this out a long time ago. We did get long bonds on the breakout of this base. We caught a nice about 7% move there. And what I pointed out here is I think we're going to have something very similar to what we saw back here, where the market consolidates. And this is where we were. We had this top, and the market's been trading in this range, and it could consolidate here until the equities market puts in the top, like the Russell 2000. When the Russell starts to break down through that neckline, we'll probably see bonds extend and start the next run higher, with the potential to go all the way up to somewhere right across here, which is around the 144, 145. That's the next high volume level of resistance for bonds. Taking a look at the chart of natural gas. Natural gas kind of trying to form a little bit of a rounding mini basing pattern here. It's starting to settle down into these previous pivot highs. High volume support is down here, so it could potentially flush out and go down to the 350, 360 area yet, but not really looking to get involved in natural gas. Looking at crude oil, of course, it's been showing a little bit more signs of weakness. If we zoom out on this chart, you can see we got this pretty major kind of pennant formation, depending how you want to draw. There's all kinds of different levels. Crude oil, obviously, with headline news can create some price swings, but overall it's been tightening in this massive pennant formation. When it does break on a weekly basis and close outside of this range, that should signify a huge move. If it breaks to the downside, we could easily see 65 or less per barrel going forward. If we see it break to the upside, we could see it really take off back up to a 120, 125 level, but overall I think the odds are favoring downside for crude oil. Taking a quick look at corn. Commodities yesterday in general had a little bit of a bounce there, and let's just overall corn, we had this move down. There's potential for it to go up around to the 28, and it has the potential to go all the way, retest this previous high up to a 31, but overall it's struggling here. Had a nice pop up yesterday. It's going to gap down this morning by about 1.6%, so it's still chopping around. It had a nice measured move, 100% measured move here, so likely see some type of bounce, which is what we're looking for. We're not really looking for a new bull market to start at this point. We're looking for simply an oversold bounce, Fibonacci measured move. All these things have come together, so we're hoping to get a nice play here and possibly all the way up to the 29 and change area. And taking a quick look at the VIX here, if it will pull up, which it doesn't want to pull up here. All right. Anyways, that's it for this morning. For some reason, the VIX doesn't want to pull up. I'm not sure why eSignal. There we go. Okay, so here's the VIX. We've seen a nice spike in price. In the grand scheme of things, if we zoom way out, we are far from a big volatility spike. Of course, this is 2011, that last big drop that I showed you in the Russell 2000. That big sharp drop created this massive volatility spike, and that's something that I think we are starting to get to. When the Russell 2000 breaks, I think we'll see eventually this spike way up, and we're going to see it chop around and really move around. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.